Welcome everyone to the Pro Trade Room Plus, Core CPI. My name is Lee Goldstein, Trading Director for 10-Minute Trades. Please remember that all the trades we discuss are for educational purposes. I'm not a financial advisor. It is possible to lose money trading futures, so trade carefully, please. Okay, good morning, everyone. We are here for Core CPI. Definitely one of the most difficult reports as of late. So we have to deal with reality. This is a very, very difficult report to trade. We have tried so many different setups. We've had range trades and trap trades and ES and bonds and euro, and it is definitely a tough trade. It's also a margin event that the brokers are going to raise the margins a few minutes before the trade, before the news gets released. So it is, without question, has to be considered one of the riskiest reports that we trade. And that's honestly because it's been extremely inconsistent in its results. And the testing that I did shows that also. I'll show you some videos, but this is the news that we're expecting today. It's the important news. All right. They're looking at 3.4% on the year over year. The core, and then CPI 3.7 on the regular. So we'll see where it comes in. I don't try to guess where the news is going to come in. That's not how I play it or how we play it. So I've got three charts, ZN on the left, NQ in the middle, gold on the right. Okay. And my plan is to trade bonds on the event. And again, there's nothing but risk on this report. If you're going to trade bonds, you could reduce risk by using ZF. So I might use ZF because this is a report I'm thinking of reducing risk. Now, there's interesting testing on the NQ, but it shows why the NQ is so difficult to trade on this report. So we'll get into that in a minute. I just want to show you, first things first, we'll take a look at the DMM. So we've got a bond setup, okay? And we've got an NQ breakout setup as well, okay? Both are definitely considered ultra risk today. It's just the way it is. Now, last month, let's see what we did. Last month, did not trade a breakout live. We had an ES trap trade that failed for the second month in a row. So that's not, we had some very good trap trade testing on the ES, and it definitely did not work. And you can see what happens, the danger with a trap trade on a report that has this kind of volatility and the potential for such large moves is it can just blow through the orders and the stop. It just sometimes doesn't reverse, or it has such a big move before the reversal, it ruins the trap trade. So in March, That was an ES trap trade. It just explodes through the trap. Very, very fast move. Very, very fast move. And you could see that gold had a big burst down also. What sometimes happens on this type of a report is sometimes liquidity dries up at the time of the event. And that causes orders not to get filled where you expect to have them filled. So, you know, everything about this type of trade can be complicated. 2 months ago in February, let's see what we did. Margins were up in February. And we had a ZN set up and we had the ES trap trade set up in February. ES trap on the left. I was looking at the yen that day on the right because bonds are not fantastic on this trade. The ES trap trade, again, exploded through the orders. The yen was an unsafe whipsaw, okay? Not a safe whipsaw. We've looked at the yen, we've looked at the euro, we've looked at bonds. Last month, bonds actually had a reasonably safe move. A lot of instruments had a reasonably safe move last month. But when I go through my notes on this report, I've got a journal. I've got multiple journals that I keep. I have a testing journal. That's an old-fashioned, old-school journal where I just keep my notes. And when I look through those notes, I've got bonds didn't work in August or September. In October, we canceled because gold moved early, but bonds did work in October. Gold got stopped in November. Gold got stopped in December. The ES had an insane whip in December. That's when we started going to the trap trade on the ES. It failed us 2 times in a row. And then bonds worked in January and in March. But the point is, lots of different setups with many different results. There's just not a lot of consistency on this event. So you have to decide, do you want to trade it? I mean, that's the decision you make. Do you want to trade it? Let me show you what's interesting about the NQ testing. So I tested 4 months of NQ. I believe I tested 4 months. Last month, it was a gorgeous move on the NQ. That, most probably, if you got a good fill, would have been a really good NQ trade last month. Good breakout. February. And every other month fills on the wrong side of the move. So in other words, but they're not whipsaws in the true sense of the word. They're fills on the wrong side that then quickly change direction. I'll show you what I mean. So this was February. See how it filled to the long side and then changed direction? You may not get a good fill and you could get a full stop out on that. Or you might hit target 1. Same thing, showed it twice so you could get a feel for it. It goes up slow enough that it looks like it would fill some orders. In January, it went up slow enough that it looked like it would fill the orders. And then it changed direction very quickly. So you need good liquidity for those trades to work. And you have to admit, when you see that kind of directional change, there's a lot of risk. I mean, that's the reality. There is a lot of risk. You need luck when a report's behaving like this. It just is what it is. It is what it is. The behavior is whippy, and that's CPI. It's because it's such a volatile report. So many people are watching it. So many people are afraid to trade it. So I've got a couple of different things that I'm doing. I've got a gold set up all the way on the right that I would do in my prop account, in my Top Step account, as a reversal continuation only. And it's highly unlikely I'll have enough time to pay attention to it, but you never know. And that's because there's two other things going on. So with a reversal continuation, I would just put full-size gold, one position, a target of 20 ticks, a stop of 25 ticks, okay? All you need for a reversal is a position, a target, and a stop. That's all you need. You want to definitely label it. I label them REV, REV. It doesn't always mean you're going to automatically reverse. You might continue in the direction of a trade. Put it on the account you want to trade. And when you enable that type of a trade, you get your buttons: instant long, instant short. So there are some interesting levels on gold this morning. I don't think the low of the day will be in play for this report because it's a little bit close. You know, it's not as close as it looks. The chart right now, we're at 66, 67, and that's 63. So that's 40 ticks away. The PP and the VWAP, interesting area. The 6 p.m. open is right above them, and then the high of the day is above them. Those are interesting levels for changes in direction, possibly, depending on the news, or continuations. But that's probably my third concentration. My main concentration, the main decision that I had to make, or that I have to make on this trade, is do you risk the NQ in the cash account, or do you just totally play it safe, lower risk, and go for the bond trade? And that really is probably the smart thing to do. So I'm trying to teach good trading habits, right? I am really trying to teach that. So I think it makes sense to do the bond trade in my cash account. That's a breakout trade. We're putting the event on at 8:29:58. That's our trigger time. The bracket is 6. And then we have targets of 7 and 16, okay? You can make them between 7 and 20, okay? And the stop is 12 ticks. Target 1 stop move I definitely would use on this report. I would make it break even -3. That means the software will move the stop to break even -3 if our first target should get hit. And then, of course, I'm going to label it bonds, okay? And then that would be in my cash account. But first, I'm just going to save my template, CPI bonds, today's date. Then I'm going to put the time to 0, and we're going to test the width of our brackets. Now, to reduce risk, you can trade this on ZF, and it's totally reasonable to do that, okay? ZF should move in a similar manner to ZN or ZB, okay? So if you were going to do ZF, you would type ZF 0624, and then your 0 time would still put your brackets on the chart. Okay, I'm turning off my 0 trade, and I put the time back to 8:29:58. All right, and then I'm also got to tell the strategy, if I'm trading it real money, put the account on the proper account. So that goes on my JOBB cash account. And then the charts have to be on the same account as well. That way you'll see the orders, you'll see the trade take place. If you're trading live and your charts are on sim, you won't see your orders. You'll hear the platform. So that's a breakout trade on bonds that's ready to go. The second setup for the Top Step account. So there's a possibility that the NQ could have a good move. It could also cost you a lot of money if it fails. If it is a whipsaw, it could not fill. I mean, that's one possibility with the NQ. It could whipsaw and stop you out for more money than you expect to lose. Those are events that can happen on a high volatility trade. 8:29:58 is the activation time. We have a bracket of 30, and we've got 2 targets, and I've got a target of 20 ticks and 40 ticks. And you can go anywhere between 15 and 60 easily, okay? Easily. You could go anywhere between 15 and 60 if you wanted to. Okay, it's up to you how you do your targets. Targets, everybody does not have to use the exact same targets. The stop is 35 ticks. And again, I would use target 1 stop move on this trade. However you like to move your stop. If you don't want to move your stop, you don't have to use target 1 stop move. That's a breakout trade. I'm definitely going to label it NQ. Okay, I know that it's a breakout, and I'm going to do the same thing. I'll save my template. CPI NQ, today's date. And then I'm going to do the same thing, put the time on 0, okay? And we'll check our bracket. How are the brackets looking? When you check your brackets and you put your time on 0, always make sure that your account is on sim and your charts are on sim. So we have a nice fat bracket so we can see the trade take place. If the brackets are scrunched like that, you can't manage the trade. You can't move your orders. You can't see what's happening. That's why I always check my bracket. Why do I label the trade? So that when I'm doing all this testing, I know the NQ is the one I disable so I can put my time back. If you don't label the trades and you have multiple setups, you're just not going to know what's going on. You're not going to know which trade is which. Okay. So the NQ, we're triggering at 58. We've got a bracket of 30. We've got a stop of 35. Targets anywhere between, you could really do anywhere between 12 and 40 to 50. The reason you shouldn't be ultra greedy on targets, remember, it has that reversal possibility. If you get a little bit of luck from the market and it goes your direction, fills your targets, and then reverses, you might be out of the trade, even if you get filled not on the totally correct direction. That's why you don't want to be too greedy on the NQ targets, because of the previous behavior, okay? And I'm using target one stop move. If it hits my first target, I want to try and have my stop in a safe place, especially because there's a possibility this could reverse. And I'll do this in Top Step. The fact that you're putting it on target one stop move, also it's like a trade that pretty much manages itself. It really manages itself. If it hits the first target, the stop will move to safety. If you don't do anything else, you have a managed trade. Eventually, if it doesn't hit your targets, you might have to manage your way out of the trade, or you can just wait and let it resolve, okay? And the same thing is true of bonds. Let's check our time sync by going to the website time.is, right? We go to the website time.is. That checks to see if my computer is in sync. Remember, in the trade room, there's a file folder on the taskbar of the trade room. It's called the room drive. And in that file folder are two programs to help you sync your computer if you have to. D4 Time and PT Sync, which is Karen's Time Sync. Those are programs you download, you run them on your computer, and they sync your computer if you're not in sync when you check by going to time.is or whatever method you use to check if your computer is in sync. Why do we want to be in sync? Because we're trading in a way that seconds matter. Being 5 seconds late for a trade could ruin the trade. Okay, so you want to be in sync. There's also some other files in that room drive that are very helpful. Our clock, this beautiful clock that we use all the time, is in there. Let's look at another CPI trade, January. Now remember, margins are up for cash accounts 4 times the normal. We had the ES trap. We were trading bonds. Bonds gave us a whip, but it was a whip that filled both targets in real life, and we had a good ZF trade, okay? We had a winning ZF trade because it filled our targets before it changed direction. The ES was a trap trade. There's the ES. And that actually looked like it would have filled the first tier and reversed. So that was possibly a winning trap in January. Okay. Let's look at one more. Let's go back, not December. I'll go to October. Okay. Go a little bit further back. then December. See what we were doing in October. Very similar news. There's not anything dramatically different about the news we're expecting. We had a bond trade still and a gold breakout. The gold breakout has not been a safe way to trade this. Sometimes it works, sometimes it whips. Definitely qualifies as a coin toss. Okay. A coin toss, meaning 50-50 with all the other problems associated with trading gold. And interestingly, in October, it looks like the move on gold was not that bad. It seemed to be a tradable move. This is gold on the right. Let's watch it carefully. Was not trading it, was just watching it. And I would say at 8:30, gold had a tradable move. And I'm not sure why my trade did not trigger back in October, but my bond trade did not trigger. I don't think it was a no fill. I think something, I don't really honestly know. Unless I canceled it, maybe I canceled it because there was a move, an unhealthy looking move, prior to the news. That's what happened. There was a outsized move prior to the news, and that can be grounds to cancel an event.